everybody, this is Brandon Cobb with House Buying Guys at HBG Capital, and today I wanted to give you guys a quick update on kind of what we're looking to do in the way ahead. As everybody knows, the single family market is super hot right now. It has had a huge run, especially here in Middle Tennessee, and a lot of people, depending on who you talk to, might have different opinions on where it's going. Is it going to go up? Is it going to go down? Is it going to go sideways? Is it going to blow up? The correct answer is nobody knows, quite frankly. And if they tell you that they know, then they're lying to you. But I'll tell you kind of what we're doing to sort of hedge the run that we've had. We've been moving our funds and our investors' funds over into commercial assets. Not everything, not all of it, but a decent chunk of change has gone on to these apartment complexes, mostly in B and C class communities. I wanted to give you a little reason as to why we're doing that. Typically in recessions, you have people who pivot out of these more luxury apartments, more luxury homes, because there's not as much money available when you have a recession. People are losing their jobs, people are skimping on the really nice things, and they're looking for ways to save money. And when you lose your job or you're looking for ways to save money, one of the biggest costs that you have is your home ownership, or it is the place that you live. And so in really, really good times, these luxury apartment complexes, usually the ones that are downtown, have the super nice amenities, typically those get hurt. Very similar to the single family market, where these big spec houses and multi-million-dollar homes, those are the canaries in the coal mine for some of these more affordable priced assets. And so our investing strategy with these commercial assets are, is it in a neighborhood that's not a war zone neighborhood, but it's not like a luxury neighborhood? So these Class B and Class C multifamily units are really where we like to invest. And one of the biggest advantages of investing in multifamily as a syndicator that I want to share with you today are the tax advantages. Before I do this, full disclaimer, I'm not an accountant. Never invest off investing advice from somebody else. Always do your own due diligence on it. Consult with your accountant on any tax questions. All right, now that we got that out of the way, one of the biggest reasons why a lot of people like to invest in multifamily and commercial assets is the tax depreciation. So everyone's pretty familiar with what the return on investment would be, whether you're investing in a single family home or you're investing in a commercial building or apartment building. And the ROIs in commercial are usually pretty good. A lot of the past investments that we've done, with investors that are closed and done deals have been double-digit returns. And part of the icing on the cake with that is not included in our breakdown usually is the amount of their investment that they get to write off from their taxable income. And I'll kind of give you an example of what this means. Again, we can't guarantee any future results. All I can tell you is just past performance. And past performance is based on a 30 to 40% depreciation on their investment. So what happens was when we acquire these large apartment complexes and commercial buildings, there is a certain percent of ownership that the preferred investor has. So just like we own the asset, when we put our investors in these assets and do these syndications, they actually are in a position where they own some of the asset. And the first thing that we do is we hire out an accounting firm that does a cost segregation study. And these cost segregation studies basically tell us what we can depreciate on the asset. So what that's basically translated in the past has been somewhere around a 30 to 40% depreciation. So what does that mean as far as taxes go? So let's say for simplicity terms, you have someone who invests $1 million in this asset in this syndication. And they put the money in, and year one, we realize that we can write off or depreciate about 40% off of our investment. What that basically means is 40% of $1 million is $400,000. And let's say for simplicity terms that this investor has an annual income of $400,000. And of that $400,000, let's say that he's getting taxed, right at I don't know what the tax bracket is. I think it's like 36%, something like that. So let's say he's getting hit for about $180,000 on that $400,000 income. So he's really only making about $220,000 after Uncle Sam comes and takes his share. So the reason why this is so attractive for people like this and other people, even on a smaller scale, is he can actually, if he invests that $1 million, he can write off $400,000 off of his income. And what that does is he doesn't have any income that's taxable now. He still gets the $400,000, but because he was able to take that $1 million and write off 40% of it, because it was an investment, an asset that he owns and can depreciate, he saved himself all of his tax money that year. That's roughly, 100 and what did we say, $180,000 in taxes, something like that. That is huge for building wealth. The number one expense that people have to pay that are preventing them from reaching financial freedom and from reaching their financial goals is taxes, quite frankly. So investments like this are a huge tax safe haven. Now there's some stuff that kind of happens on the back end when the asset sells. You sort of recapture some of that depreciation, and that's why it's important to make sure that you plan ahead. Usually most of our investors, when we sell out of these larger deals, we also have another one that we can roll them into, which basically creates a situation where they don't get hit with the depreciation on the back end when it sells, or we help them put themselves in a situation where they're able to recoup some of that depreciation on the back end when it sells through some other asset class. Anyway, these were some really big tips that I noticed that a lot of people who I talked to when they're looking to invest in real estate did not know about commercial real estate. And a lot of our investors are having success with it. I want you guys to have success with it. So, whoever you're talking with about it, you can make sure that ask them what the tax depreciation is going to be on the benefits and if there are any. So anyway, hope this helps. See you guys.